Well, we start off tonight's show in Ethiopia. The country is facing pressure to devalue its currency in order to secure much-needed support from the International Monetary Fund. Well, the government is seeking about $3.5 billion from the IMF. Last week, the fund's mission left the country without reaching a deal with authorities. Now, of course, Ethiopia is East Africa's most populous nation. It also became the third African state to default on its debt back in December. The IMF is not actively pushing for currency reforms in Ethiopia, but the fund usually favors flexible market-determined exchange rates. Now, the country's chronic foreign currency shortages and a tightly controlled exchange rate has allowed a black market to flourish in the country, on which we've seen the Ethiopian birr trading at between 117 and 120 birr per dollar. That, of course, is more than double the official rate of around 56.7. Now, Ethiopia's external debt rose to $28.2 billion at the end of March. That, of course, is according to government data. Well, CGTN's Girum Chala joins us now in Addis Ababa with the latest on this news. Great to have you as always, Girum. Now, of course, currently, as we mentioned, the black market is flourishing in Ethiopia. We're seeing the birr trading at more than double the official rate right now. How bad is that foreign currency shortage in the country? And, of course, inflation as well right now.
Good evening, Uche. The current problem of foreign exchange in Ethiopia, the hard currency, is very serious. As you've said, it's something that can be explained as a chronic problem in the country. The cause: one, Ethiopia is undertaking mega projects, including the Grand Ethiopian Renaissance Dam, which is consuming a lot of this US dollars and others, so that the dam could be completed as soon as possible. In undertaking that itself is a burden for the Ethiopian economy, although the result is going to be something that everybody is looking forward to see. On the other hand, there is also a problem of a deficit between the import and export business in this country, as the country is importing a lot, also consuming the dollar out of this country, and exporting very little. The government says that it is working at the moment in order to at least, equal the import and export business in this country. So the foreign exchange problem in this nation is very serious, and it needs to be handled as soon as possible, as many companies, including those in the manufacturing sector, are struggling in order to undertake their businesses on a daily basis. Now, let's talk about the inflation rate of the country. Ethiopia at the moment, according to the information we got from the government, has almost 30%, close to 30% rate of inflation in this country. This is very big, and it is also reflected mostly on consumer goods, food items to be more specific. So people are also facing lots of problems with this. The government says that it is working day in, day out in order to minimize the level of inflation. They have succeeded somehow, but there is a lot of work to be done in order to decrease the inflation level of the country.
Well, Girum, there's been some discussion around the sometimes tough terms that come with an IMF package, such as the devaluation of a currency. So are authorities in Ethiopia right now on board with a devaluation of the birr?
The short answer, I don't think so, and that's not the case. You've said earlier on your intro, the IMF people were in Ethiopia several times, and the recent one perhaps a week or so back. And it was no deal again, as the most important sticking point here is the request of the IMF for Ethiopian birr to be devaluated, according to analysts, by at least 15%. Now, devaluation is going to be a headache for Ethiopian authorities. Ministry of Finance people tell you that. Experts in the Ethiopian economy tell you that. Ethiopia's economy does not really appreciate another devaluation in this short amount of time, because the inflation level, as I was saying earlier, is 30%. It's reflected on day-to-day goods which people are using, including food items. And now devaluating birr is going to cause a lot of problem in this country. The government does not really appreciate that. It doesn't want it to happen. Some also say that examples from Sudan and Egypt, for instance, are not really showing something that is encouraging for Ethiopia to continue devaluing its birr. Come end of this month, for instance, there is another meeting that's going to take place between IMF people and Ethiopian officials in the United States in order to iron out the problem. Ethiopia, however, needs this loan from IMF and as soon as possible, but they are not really keen at the moment, as we know, in order to devalue the Ethiopian birr.
Well, let's get further into that, Gerwin, because how critical, how significant will be this $3.5 billion in support from the IMF be to Ethiopia's economy right now? How desperate is the country for this money?
So we've talked about the shortage of foreign currency, Uche. There are mega projects to be completed as soon as possible. Inflation rate is relatively high in this country, and there is this economic reform plan by the Ethiopian administration, which they want to advance in order to achieve more economic growth, create jobs and others in this country. And the $3.5 billion that the government requires from IMF is very critical, very important for the economy to perhaps jumpstart again and return to this normal situation as soon as possible. Remember, this $3.5 billion loan that the Ethiopian government is looking forward to getting from IMF, relatively speaking, for instance, what Egypt and others are getting at the moment is very low. But it is critically important for the Ethiopian economy. It's going to, create that, needed, push from the back so that it can return to a normal track. This economy has been affected by war, consecutive conflicts in the country, climate change, and many others. And this IMF loan is going to perhaps, provide the much needed rescue for the economy to continue in the growth trajectory. And people are also hoping that this loan is going to come on time so that it can provide the necessary, the needed support for the Ethiopian economy.